Hi guys, welcome to my channel. This is Vincent Loo, and today we'll dive into the essential order types that you need to understand before you do cryptocurrency investment. If you haven't subscribed already, please hit the red button for me for more cryptocurrency educational content. And now let's try to break down these order types using an exchange that everybody knows, which is Binance. And if you haven't watched my previous video on how to come up with a cryptocurrency investment plan, please click on this link here before you watch this video. And if you don't have Binance, let's sign up one right now. All you have to do is scroll down from here in the description below and click on the link is Binance. So this is a referral link and you can get extra 0.018 BTC Token Voucher. So all you have to do is press this link. So right now, if you see that it's keep on loading, all you have to do is open VPN because your IP address been blocked. All you have to do is on VPN for you to access to Binance. If you want to know how to change your IP address, you can click on the link in this video here to know how to use VPN, how to install VPN, and how to change your IP address. So now that I use VPN, I should be able to load Binance, which you can see right now. I can finally get Binance. Claim your 100 USDT. Just follow the sign up. It's a simple process. After you sign up, there you have your first Binance account. So after you sign up to Binance account, right now you can actually try to deposit money into your exchange for you to trade. So you can actually do this by going to trades and P2P. So for global exchange like Bybit and Binance, we have to use P2P to transfer our Malaysian ringgit and to buy some USDT, right? We need to use USDT to trade crypto. And then P2P is like peer-to-peer transactions where you just try to convert your money. Like you go to the other countries, try to convert your Malaysian ringgit to the currency that used by there. And in exchange, we use USDT, which is a stable coin. So all you have to do is press P2P trading. So for Malaysia, due to some regulation issue, you cannot search Malaysia. Right? You cannot search Malaysia. You can only search PGK. But PGK is actually a Malaysian currency in this Binance system. So you can actually go and click on it to know, right, whether is it actually Malaysia. So you can see I have Maybank, CIMB, then you will know that this is Malaysia. So you can actually look at the feedback of this particular advertiser. So the advertiser is very good transactions, right? So you can actually deposit Malaysian ringgit into exchange here. So for example, I want to buy USDT at this rate right here, which is 4.751, and he accepts up to 5,000, minimum 4,500, which is quite a lot. You can actually go and see it out. Okay, so in the terms and condition, you need to WhatsApp him, right? Then must have your own account, gain P2P transactions like this. So basically, alright, this is a Malaysian phone number, as you can see. So this is Malaysia, right? PGK in Binance is Malaysian ringgit, and this is how you buy, USDT and deposit money in the exchange. If you want to see the whole process of P2P, I did it in Bybit, which is pretty much very straightforward and same as Binance. So click on this link here to see how I do the P2P transactions, right? It's very straightforward. You just need to follow the instructions and you can transfer money and buy some USDT. There's another way to use between Bybit and Binance. And if you have some USDT in Bybit, you can actually transfer it to Binance, which I will show you right now. So right here at your Binance account, if you try to deposit some of the crypto, right, you're gonna deposit some USDT from Bybit. So all you have to do is deposit crypto. We want to select USDT, okay, USDT. Then we want to select network. I like to use BSC, which is a Binance System Smart Chain. Then this is our address. So now let's go back to Bybit. In Bybit here, I have 100 USDT in this unified trading. I need to convert it to funding first. So I want to transfer from unified trading to funding for us to transfer this USDT to Binance. So let's confirm. Now it will be in our funding account. All right, let's refresh it. Okay, now that we're here, now we need to withdraw out to Binance. So all you have to do is come over here to this assets page, and then we withdraw. Then we want to withdraw some USDT, which is over here. It says funding, we have 100 USDT, right? On-chain withdrawal, and then please enter the address. So go back to your Binance. You need to select this address and paste it here, right? Chain, again, we need to use the same chain right here. You want to use the same chain. So if you use BSC over there, you need to use BSC over here. Then we want to withdraw everything, right? So we can see that here we will charge a USD transaction fee. So by doing that, you will charge a transaction fee. So it depends on you. So P2P, we have a different rates. When you do P2P transactions, it's according to the advertiser rates, right? If you are lucky, you can select low rates, or you can use P2P transaction in Bybit, right? Bybit have Malaysia ringgit currency, which is not the PG get in Binance. Then only you use Bybit to transfer to Binance, right? It's very simple, right? Very straightforward. So all you have to do is first confirm, then you can transfer your USDT from Bybit to Binance, which I will not do it right now, but you can have that option as well. Now let's get to order types in Binance, right? Order types in crypto trading are used as tools to instruct the exchange how much I want to execute the trades at what price. So it's like a communication between us and exchange. So we'll be covering most of the orders available in Binance, and the most common orders types are market orders, limit orders, right? And then stop limit orders. We have the OCO and the trailing stop orders. Right? We'll investigate each one of them and every one of them in both buying and selling crypto. Let's get to it. Let's talk about market order first. So market order is the most straightforward types of order where you place a market order to buy or to sell crypto. The exchange will execute the trade immediately at the current market price. For example, if you're buying crypto, let's say Binance, you purchase it at the best available selling price in the order book, right? As the same goes for selling, right? The order markets will execute the trades at the best available buying price in the order book. So now let's open up the trading page in Binance. So all you have to do is go to trades and then press spots, where you buy and sell spot market with advanced tool, which is some order tools. So as you can see, this Binance trades for spots. Right now I'm at the BTC page, right? BTC USDT. I'm going to trade buy Bitcoin using USDT. So at the left hand side here is our order book that I said just now. And then as for the market price right now, we are at 67,719. As you can see, this red line here. And then as for buy, right? A lot of people are queuing buy at this price. So you can see that the spread is actually very small. There's only a difference between 0.01 cents, right? That's the spread for each exchange. So it doesn't move much right now. So if we can scroll down here, this is our order types, right? We have the lot limits with the market, with the stop limit, and then we are at spot right now. So this is basically where we place our market order. You press markets. So the price will be shown as market. So it will take the most available price, which is over here, right? And now you can see it's 67,790.56 cents. So that's your market price for the buy. So when you buy, you're gonna buy from people sell, right? A lot of people are selling at this price right here, which is the market now. And if you buy, you sure you buy this price. So right now you can use this to select how much USDT you want. Right now I have none. So it depends on your account and your exchange. So after you set it up, you press buy. So when you press buy, it will automatically execute at any available price at the sell book. So this is market order. So a few things you need to consider when placing a market order, right? Bitcoin and cryptocurrency markets quite volatile. So when you place market order, you might not get the price that you see on the screen. So the price might go up or go down. So it depends on the volatility and the cryptocurrency that you are placing the order at. So that's the thing you need to consider. Another thing is, if you want to place market order, the transaction fee is a bit higher. So it depends on whether you want to use your market order. How about let's use limit order instead? So let's get right to limit order. So a limit order allows you to set a specific price that you want to buy or sell. For instance, for buying, you want to set the price that you're willing to pay, right? For example, Bitcoin right now is like 67,000 something, but you want to buy it at exactly 67. So you open a market buy at 67, and if the price drop to 67,000, then your order will be executed. So same things goes for selling. Let's say you already have Bitcoin and you want to sell it at higher price, right? Let's say you bought it at 50K and you want to sell it at the market price right now is 67,000 something. You want to sell it when it reaches 70K, for example. So you open a sell order at 70K for Bitcoin price, and then you want to sell everything. So this is how you want to utilize limit order. The limit order, you have to wait for the market price to achieve the specific price that you set in terms of buy and in terms of sell. So let's see how we can set this up in Binance. So in Binance, right, the first one is limit, right? You can see from the spot here, the first one is the limit order. So right now, this limit order, I will want to set my limit order maybe around lower than the market, right? Right now, I'm buying it. I want to buy at a cheaper price than the market price, and maybe you hit this limit order when it drops. So let's say I want to buy it at 65,000, right? Let's say I want to buy 65,000, which is over here. You can see on the screen. And then how much that I want to buy, right? Right now I don't have any USDT. If you have it, then you can scroll it all up all the way to here, 100%. You want to buy, you use everything in your USDT wallet to buy Bitcoin at 65,000. So this is how you place a limit buy. And for limit sell, let's say you want to sell your crypto when it reaches a higher price, maybe 70,000, right? Always set it higher than the market, right? Higher than the market, 70,000 is right here, right? It's around here. So when the market price increase until 70,000, you execute your limit order. Let's say I want to sell everything, right? So this is how you sell your Binance, your Bitcoin in Binance. So let's say for limit order, things that you want to know is once you place the order, you show up in the order book here. So your order, if you place at 70K, then your order you show here, but it's together with a lot of orders from a lot of people. But you are queuing. These are all the queues right here that you can see. As for sell, also is all the queues that you can see here. So this is how you execute a limit order. So now let's move on to stop limit orders. Right. When buying stop limit orders, we can set a stop price to trigger the order. For example, a stop limit buy orders is placed above the current price to ensure you only buy once the asset starts moving in the favorable bullish direction. For example, right, let's say I have an altcoin. The altcoin right now is at 100. You might want to set a stop buy at 150 and a limit at 145, right? The reason people do that is because if you see that the price reaches 150, it indicates an upward trend, right? You do not want to buy because we are unsure that whether it's moving up or not. So we set a stop limit buy, right? When the price moves out and it confirms, okay, this altcoin is going, the bullish direction is going up. So we would want to use a stop limit buy for entry. So as for a stop limit sell order, right, for example, you might want to set the stop price at lower than the market price. For example, you own altcoin at about 100 price. You want to set a stop price as 95 and limit at 90 to safeguard your order, right? So this is how you want to set, stop limit sell. You can use it to, safeguard your orders, or you can also use it to take profit. So this is how you use stop limit. So let's dive into Binance and see how to set this up. So in this trading page right here, you can see you have stop limit here. If you press stop limit, you have a stop price and a limit price and an amount. So in difference between limit, you only have a price, which is a limit price. A stop limit have an additional stop price. So this stop price will trigger your order to place the limit order. So You can take it at a sense like that. For example, right now the price is at 67,667, right? So this is the market price. So let's say I want to have a stop buy, right? This is a stop buy. I would want to place, I want to buy it, let's say I want to buy it here, slightly lower, for example, or you want to buy it higher if you want to see, the trend going upwards favorable to you. But this is spot trading, so I want to buy it at lower than the market price. Let's say I'm gonna buy it at a strong support right here, which is about 66,500. So let's put a stop price at 66,500 USD. Then you have a limit. The limit I want to place as close as my stop price as possible because I want to execute it immediately once it reaches this. So I want to put it at maybe a $5 difference. So 495. Then I'll place the amount, let's say how much amount that you want. So the reason people use stop limit because it won't show up in the order book once you execute this order. I mean, once you place this order, it will automatically show up, right? It will only show up once it hits this stop price. Right? If you hit this stop price, the order will only show up at the order book and the queue at this limit or price, which is 66,495. Same things go for sell, right? Same things go for sell. You have a stop price to execute the order, which will place the limit price that you set. For example, I want to sell it, let's say, higher than 70K, 72K. Maybe I want to set the price to trigger this order to trigger at 72K, 100. Then I want to set the limits at very, very close, right? So very close, just take $5 apart. And this is how you place a sell order. If you have a BTC, you can sell it like this. So this is how you use stop limit, right? Either you can use it stop limit sell to take profit or to, safeguard the order. So it depends on how you want to use it. Another valuable order type to understand is one cancels the other. OCO order. This type of order combines two orders together, a limit order and a stop loss order, where one of these orders is executed, the other is automatically cancelled, providing a more flexible approach to managing your trades. So here's how it works, right? Imagine you have an altcoin which is currently at 100 USD. You want to sell your altcoin to take profit, but you also want to limit your loss if the price drops to, let's say, 95. So you can set an OCO for this. So you have a limit order where you set the sell price at 110, which means the price of the Bitcoin is just 110, your order will be executed and you sell everything. Or you have a stop loss order. Simultaneously, the stop loss order will be to show out maybe, let's say, 95. This means that your price of your Bitcoin falls to 95, the order will execute and you sell everything. So with OCO in Bitcoin, in Binance, right, you can have a secure profit, let's say at 110 for your limit order to execute, and you have a stop loss automatically cancel out. And vice versa, if the price hits the stop loss, which is 95, the stop loss order will execute and the limit order will be cancelled out. Right now, I'm at the OCO page where you can find it here. OCO once cancels the other, and then usually we use it for sell, right? So this first column here is for you to take profit, like how much you want to take profit. For example, I want to take profit at 75,000, right? Key in 75,000. And stop is the trigger for your limit stop loss. So I want to trigger, let's say I want to trigger the stop loss when it reaches, 65,000. Sorry, I want to stop loss at 65,000. Then the stop trigger price, I want to be very, very close to my limit, the stop loss price. So let's say I want to trigger it slightly $5 higher. So this is how you set, and you want how much BTC you want to sell. So right now, if you execute this, you show up, the take profit order here, and then you show up the stop loss here. So this is how you set up an OCO. Now another order, right? Another most important order is a trailing stop. This type order is designed to lock in profits while protecting you against the downside risks by automatically adjusting to market condition. Sounds amazing? So this type of order is actually my favorite order, right? Let's look at an example to understand how it works. So in the case of a trailing stop, the orders actually moves with the market price, allowing you to set a stop loss price at a certain percentage below the market price. For instance, same scenario again, you buy an altcoin at $100. You set a trailing stop at about 10% through, which is called a trailing delta, right? The stop loss will initiate it at $90 when you buy, enter the market at $100. So at 10% is 90. So when you go to work during the day, the altcoin price rise 200, the trailing stop will actually adjust itself automatically, right? When it rises to 200, it will maintain again at 10% gap. So the stop loss is now at $180. So again, the price suddenly drops down, right? And then it will touch your stop loss at 180, making you have secured an amount of gain there from 100 to 180. So by using a trailing stop loss, you can take advantage of the price increase without constantly monitoring the markets. And then you can take profit there when you go to work. You don't have to monitor, all the time and adjust your stop loss. So a trailing stop actually is valuable to managing your crypto investment effectively. How do we set the trailing delta? Right, setting a trailing delta correctly is crucial during the crypto high volatility. If the trailing delta is set too close to market price, when the temporary dips might trigger to sell off, causing you to miss out on the potential gains when the price rebounds. Therefore, it's important to set the trailing delta close enough to avoid selling too early, but allowing for normal price fluctuations. Alternatively, you can adjust the delta once your target price is reached. For instance, like an example, if you initially set a delta at 5% at $100, right? When the price is at $100, you set 5%. And you have a target price of 200. When the price reaches 200, maybe you can adjust the delta to a smaller value, right? Because you suspect that, once it reaches 200, the price will actually hit the resistance and facing a selling pressure, so it will drops. So you might want to reduce the trailing delta to secure more gains. So this approach helps you to secure more profits if the price hits your trailing loss. So that's how you make full use of a trailing stop. Let's go into Binance and demo right now. So again, this page right here, over here you can have a trailing stop. Right, when you press a trailing stop, again you have a trailing delta. So again, this is where you want to set the gap of from the current price, right? A gap where you just want to adjust the stop loss at. So when the price goes up, the gap will always trail it, and when it goes down, right, the gap of the price, the stop loss price will stop there. So this is how you want to make, a trailing delta. So the percentage depends on you. So let's say you have a target, right? You want to target the Binance Bitcoin goes to 70K. So if it goes to 70K, it will drops down. So you might want to, you think that, okay, it will fluctuate a lot, right? Before it reaches 70K. So you might want to set a trailing delta, maybe a very high percentage, right? Let's say 5%. And then, this is where the limit. So this limit right here, is for your initial stop loss. So your initial stop loss, maybe you want to set somewhere around 65K, right? 65K is limit, initial limit. So let's say I want to set it at 65K. You will either hit your limit, right? Or you hit your trailing delta. 5% of the market price, let's see, right? So 5% of the market price is actually very low. So this is the 5%. So you use some current market price minus 5%, which is your trailing delta, right? The trailing delta is 5%. So right now, initially, the 5% set as 64,000. So if it's 64,000, is actually lower than the limit here, right? The initial stop loss limit here. That's why sometimes you want to set your initial stop loss limit. So this is the initial stop loss limit, and then you always show 5%. So as you can see, 5% is around 3,383, which is a lot. So maybe I want to make it smaller because 3,800 gap is actually quite a lot, right? So 3,000 gap, let's say the price just now is at here, so the gap is actually this high, this much. It depends on how you want to set it up. Maybe you want to set it smaller, right? So it actually depends on how you want to trade your stop loss. So in conclusion, these order types like market orders, limit orders, stock limit orders, OCO, and trailing stops orders, they are all the essential tools for your daily crypto trading. So each serves a unique purpose and can help you navigate through the volatility of crypto market effectively. But please learn and watch this video carefully, right? If you don't understand, you might repeatedly watch it, or you can comment below to ask any questions and I'll reply to it. And if you find this video helpful, please leave a thumbs up and leave a comment and subscribe to this channel for more cryptocurrency videos. Right, stay tuned. Peace!